Welcome back here to Market Fatafat, where we're getting you all the top buzzers in trade, the reasons why they're buzzing, either on the back of news flow or on the back of technicals. And now on the technicals, we're joined by Raj Deepak Singh, who's the analyst, derivatives, ICICI director, and from our research team, we're joined back by Rabinder and Kanishka. Hi Raj, thank you so much for joining us. Let's pick out your first stock that you picked out for us on the charts, and that's Nalco. Tell us, what do you see on the charts for Nalco? Because this one's started moving up, in the last 5 odd days, it has shown some good movement. So from here on, where do you see this headed?
See, as of now, if you look at an overall metal pack as a sector, they have shown significant resilience in despite this recent market volatility, and particularly the non-ferrous one. And if you look at from the global front, then LME prices, they are trading near their 4 months high. So perhaps this kind of outperformance in non-ferrous names that might continue. And when it comes to Nalco, so stock has reverted from a very good support of 190. Now closer among the call options across the board is evident. So as of now, we will remain positive till it is holding above 190 odd level. And further momentum in this stock can be expected if it is surpassing 200 odd levels also. So either a productive port strategy or a stock with a stop loss near 190, that's what we are recommending here.
Right, moving on from Nalco to the next L&T Finance that is in focus on the back of a brokerage note by Antique that is maintaining its buy call with a target price of 243 rupees. Now, they feel that, it was a strong quarter with strong headline numbers coming in for the company. They expect the LTF to report an earnings CAGR of 23% over FY25-28 estimate with an AUM CAGR of more than 25% over the same period. Now, the management's commentary is positive, and going forward, the credit cost post quarter 2 will be the key monitorable for the stock. Now, given the bargain rate, given the benign rate environment for NBFCs providing margin tailwinds and improving operational efficiencies, they believe that they are positive in the offing, and on the back of that, they're still maintaining a buy call on L&T Finance. On the back of that, L&T Finance is in focus. Currently, though, it is reeling under some selling pressure with cuts of 0.8%. But let's move on within the financial pack, let's move on to Bajaj Finance. You've picked out Kanishka. Tell us what's the news flow on Bajaj Finance.
That's right. So Bajaj Finance is in the spotlight today with a top-level leadership reshuffle that has happened. It's catching the market's attention. Now, Anuj Saha has stepped down as the managing director just 3 months after taking charge. Rajiv Jain, who led the company for over 15 years, has now resumed as the MD role and has been elevated as executive vice chairman as well and MD until March 2028. Now, analysts are seeing this as a transition which is smooth, and the long-term outlook that remains intact thanks to Jain's leadership previously. Now, Jefferies and Citi, they've both retained a buy call on the stock, citing strong growth visibility and attractive valuations for Bajaj Finance. And hence, the stock continues to be in focus, trading more than 0.5% higher.
All right, keeping with the financial space then, while many financial stocks have run up in the past few months, Harsha Upadhyay of KMC likes select names on the back of multiple tailwinds. Let's go across and listen in.
Within banking and financials, I think there are certain names which are doing well. And whatever the impact of repo rate cut on the names is also probably more or less behind us. So to that extent, I think things should be fine in this basket as well. There are certain banks which are delivering on growth as well as asset quality. There are certain other names which are finding some headwinds on either asset quality or on the growth. I think that's where you need to look at all of these factors and also keep valuation in mind. The banking and financial sector, while it has outperformed in the last 6 to 9 months, is no more very, very attractive in terms of valuations, right? I mean, we have seen some absolute performance as well as relative performance from this basket. So to that extent, I think we need to keep all of this in mind. And as we discussed in the earlier part of the show as well, this is unlikely to be a season where you will see too much growth across segments, across businesses. So to that extent, you need to be careful in terms of what valuation you are paying for some of these names and how resilient would the earnings growth be as you go ahead.
All right, moving on then to the next counter that is in focus. And Rabinder, you picked out Havells for us, an earnings candidate. A weak set of numbers coming in for Havells. Take us through what does the report card for Havells looks like.
Well, as Havells India is in focus on back of their Q1 FY26 earning, where company reported a revenue at rupees 5,455 crore with a downside of more than 6% year-on-year basis, and net profit also saw a decline of approx 15% year-on-year basis due to weak summer heating, AC, fans, and cooler sales. And if we talk about EBITDA, then company's EBITDA also down by 10% year-on-year basis. But management remained positive on the outlook, and BofA has come out with a note, and they have upgraded the stock to buy from underperform and hike target price to rupees 1785 as compared to earlier target price of rupees 1400. They say that the earning downgrade cycles largely behind, and the risk reward seems favorable for the Havells India, and wires and cable segment of the Havells India continue to outperform, and the festive tailwinds ahead. So back of the management positive outlook and the upgrade from the brokerages house, stock is in focus, and the stock is trading with a gain of more than 2.5%.
Havells trading with gains of 2.5%. But Raj Deepak, let me come to you for ACC. ACC, what do you see in the charts for ACC? Because ACC hasn't really done much. It has shown some momentum in the last few weeks. But from here on, what do you see on the charts?
See, if you look at the entire cement pack, then we have seen a significant outperformance vis-a-vis the rest of the market. And whether it's Amuja versus ACC or the rest of the stocks also, ACC has clearly underperformed. So while I don't want to get into the fundamental reasons behind it, but the one thing is that the stock is moving out of F&O by the end of this series. And obviously there has been significant short positions in this stock. So what we believe towards the end of the expiry, particularly the next week, we might experience a round of short covering in this name. So perhaps with a stop loss till 1920, 1940, we can expect a move of 5 to 8% in this counter towards 2050 to 2100 levels. And that sort of short covering shouldn't be ruled out in this stock.
All right, moving on then from ACC to pharma named Cipla. Kanishka, tell us what's the news flow for Cipla?
Right, so Cipla is in focus today after a strategic investment move that it has made. Cipla has signed a definitive agreement to acquire a 20% voting stake in iCaltech Innovations, which signals a push into advanced technology-driven healthcare solutions. Now, this move expands Cipla's footprint into biotech and health tech innovation. Now, investors are watching how this investment enhances in its R&D capabilities and positions in the company for future growth in high-value segments. On the back of this pack, the stock is in focus today, however, trading in the red, currently down more than 0.5%.
Right, moving on then from Cipla to Exide on the charts. Tell us, Raj Deepak, what do you see for Exide again? This name has picked up some bit of gains coming in the last 5 odd days. What do you see on the charts for Exide?
Again, I would like to be a bit preemptive here. The reason being, market has been quite a range bound, and here more of a stochastic action. That is what we are experiencing. So when it comes to stocks like Exide, so it's trying to approach its highest call base of 400. And if you look at the chart, then perhaps in last 1 month, it hasn't been able to even surpass 390. So the stock is results in the first week of August series. I think 5th of August is the result date. Before that, we can expect a round of short covering here, and if it is sustaining beyond 400 also, then particularly a greater up move is quite likely in the Exide Industries. So I would be positive, but would prefer a protective sort of a strategy in this name.
All right, further upside could be there for Exide Industries, but let's move on to the next counter. That's CIE Automotive. That is declining almost more than 1.5% in trade. Ravinder, tell us what do the numbers look like for CIE Automotive?
Well, as CIE Automotive is in focus on back of their mixed set of number in Q1, and company reported revenue at rupees 2,369 crore as compared to 2,293 crore, with an uptick of more than 3% year-on-year basis. And if we talk about net profit, then company's net profit saw a decline of approx 6% year-on-year basis to rupees 203 crore. If we talk about EBITDA, then company's EBITDA also saw a downtick of more than 6.5% year-on-year basis at rupees 36 crore as compared to 361 crore. And if we talk about EBITDA margin, then company's EBITDA margin also saw a decline of more than 150 basis point year-on-year basis to 14.2%. So overall, a mixed set of number of CI Automotive, and stock is down over 1%.
All right, the CIE Auto is down almost more than 1% in trade. But Kanishka, you picked out Cummins for us. Tell us, Cummins, what is the news flow here? That is also down almost 0.5% in trade today.
That's right. So Cummins India, it's drawing attention to today after an important leadership reshuffle that has happened, effective yesterday, that is July 21st. Soma Dilip Ghosh has been appointed as the new Chief Financial Officer and key managerial personnel of Cummins India. Now, she succeeds Prasad Kulkarni, who has been the interim CFO. Now, he will now take on the role of Director Finance Controller for the company's distribution business unit in India, and that's why the stock is in focus today. And like you pointed out, it's about 0.5% lower.
All right, moving on from Cummins India to another counter that's not doing that well is CAMS. Raj Deepak, tell us, what do you see for CAMS in the charts? This is again a counter which hasn't really done much in the last 6 odd months. On the charts, do you see an upside coming in?
Exactly no. See, profit booking or consolidation is what we are expecting in the capital markets need. So particularly when it comes to CAMS, we have seen significant short additions in this stock in the early part of the series, and at that point of time, it has moved from 4,300 levels to 4,000 levels. And despite this recent recovery, it seems like more of the short positions are still intact. So I wouldn't be positive in this name until it is not surpassing 4,300 levels, or we don't see a closer among the short positions. So in that scenario, with a stop loss near 4,300 odd levels, one can look out from some bit of downside here. So perhaps a retesting of 4,000 or 4,050 odd levels is quite possible in CAMS.
All right, moving on then from CAMS to the next counter, that's Oberoi Realty. Another earnings candidate. Rabindra, take us through the fine print of the earnings.
Realty is also focused on the back of the Q1 earnings, where company reported revenue at rupees 988 crore as compared to 1405 crore in the last year same quarter, which was down by approx 30% year-on-year basis. And if we talk about net profit, then company's net profit also saw a decline of approx 28% year-on-year basis, and EBITDA margin saw a decline of 36% at rupees 521 crore. And if we talk about EBITDA margin, then EBITDA margin also saw a sharp decline, more than 500 basis point year-on-year basis at 52.7% as compared to 58%. So overall, a weak set of number of Oberoi Realty, and stock was down 2% in the early trading session, but stock has recovered 2% of the day's low, but still trades in red.
All right, that's Oberoi Realty. But let's talk about the earnings then. Ashish Gupta, who's the CIO of Axis Mutual Fund, discusses corporate earnings growth. He believes we should see a rebound in the second half of the year. Let's listen in.
Valuations are not inexpensive in the market. What is important is that we this year get the growth pickup that is being forecast. Last year, market earnings growth had come down to about 6-7%. This year, the expectation is that growth should pick up to about 11-12%. And a lot of it is actually hinging on a recovery in the second half. And the big hope is that in the second half, on back of the good monsoon, as well as all the liquidity infusion and rate cuts that have happened in the last 6 months, there is a pickup in the economy, and that reflects in earnings. As of today, we are not seeing that. If you see even bank credit growth, that still continues to be in single digit despite the liquidity infusion. So I think we are placing a lot of expectations on a stronger second half.
All right, moving on then to the next counter which is in focus, and that is BEML. Kanishka, you picked up BEML for us. Talk to us about the stock split and the announcement and the details for that.
That's right. So like you pointed out, BEML has announced a division of its equity shareholding structure, and the company will split each existing share with a face value of 10 rupees into 2 shares of 5 rupees, marking its first ever stock split to enhance trading liquidity. Now, in an exchange filing yesterday, BEML revealed its decision to execute and create a 1:2 stock split. Now, this initiative awaits shareholder approval before implementation. The record date for the stock split is yet to be finalized and will also be announced by the company's board in due course. And that's why the stock is in focus today, currently trading about 0.5% lower.
All right, so that's BEML declining in trade on the back of that stock split. But with that, we are completely timed out. These are all the top buzzers in trade today. Rabinder, Kanishka, Raj Deepak, thank you so much for joining us and giving us all the buzzers in trade. But M&M Finance is another counter which is in focus, which is all set to report its Q1 numbers today. My colleague Varun is joining in with what the street is expecting. Let's find out.
Well, we are expecting stable set of numbers from M&M Finance on the back of the quarterly update that the company has given. If you look at the overall disbursement growth, the company has given a growth of around 1%, and also the business assets, they have grown by around 15%. The collection efficiency has actually been around 95%, and the overall stage 3 assets were estimated to be in the range of 3.8 to 3.9%. On the back of this, we are expecting the overall AUM growth to be around 14.5%. The NII, that is expected to grow by around 9.9% to 1,960 crores, and also the PPOP, that is expected to grow by around 12%, and the profitability, that is expected to grow by around 7.2%. The overall asset quality is expected to remain stable, and the overall credit cost, that is expected to decline on a quarter and also on a YOY basis. Need to keep an eye on margins, how they are in this quarter. Will we see an increase? Will we see a reduction? Because if you look at other NBFCs, there has been some increase in the overall margins. Also, the credit cost and loan growth are some of the key monitorables in this quarter. All in all, we are expecting a stable quarter for M&M Finance.
And well, moving on then to the IT giant Infosys, that is also set to release its Q1 numbers, while the street is expecting pressure on the profitability. What is this really on the radar? Let's go to my colleague Pulkit to find out.
After TCS, Wipro, HCL Tech and Tech Mahindra, now it's time for Infosys. So if we talk about the expectations from Q1 result, in the USD terms, the revenue could be up around 3%. In INR terms, we are expecting around 2.3% upward movement in revenue. If we talk about EBIT, we are expecting somewhere around 3% up. If we talk about EBIT margin, we are expecting it to be flat, around 21%. And if we talk about profit after tax, we are expecting to go down by around 3.5%. If we talk about the management commentary expectation, we are expecting the deals to be stable, around $2.5 billion. We are also expecting a weak discretionary spending in manufacturing and retail segment clients. We are also expecting the guidance to be maintained, that was around 2 to 5% in the growth, and for the margin part, was around 20 to 22%. Company had given this guidance in the last quarter, so we are expecting that company will maintain this. The key monitorables that will be to watch out for: US business and the BFSI segment business, how it is performing for the company, the deal pipeline and the Gen AI impact on the business, any changes in the FY26 guidance that company had given in the last quarter, what is the outlook on the discretionary spending from the clients, and the most important thing and the last, that is headcount and attrition trend, how it will perform. Once the result will be out, we will update you.
All right, so that's what we need to watch out for as far as Infosys is concerned. But Dixon Tech is also set to release its Q1 results today. My colleague Shrishti is here to decode what the street is penciling in for Dixon Tech. Over to you, Shrishti.
So this time around, we are expecting a double-digit growth number yet again for Dixon Technologies, not on a YOY basis, but also on a sequential basis, wherein the profit figure can actually be at 221 is what our estimate is. But apart from the numbers, the kind of growth in the top and the bottom line, the key to track will actually be the margins, because the expectation this time is of a slight decline on a sequential as on a YOY basis. 3.7% is our expectation, and the decline in the margins could actually be on the back of the mix shift towards lower margin business, mobile as well as EMS. But in terms of the volumes, as per some of the experts and as per Kotak Institutional forecast, the smartphone sales could nearly be around that 9.5 million odd mark in Q1. That will be driven by the Motorola export, the push in the domestic market as well, and that will also be one of the other key monitorables. But in terms of the other segments as well, be it the hardware segment, the telecom segment, that's also expected to show a good growth number in this particular quarter. So all in all, a good set is expected from Dixon Technologies. Yet again, the margins will be the key monitorable. But apart from that, within the management commentary, what is the outlook going ahead? What sort of a new clientele that they are working with, and along with that, some of the recent JVs that they have announced, how is that going to impact and support the growth of the company going ahead? That is something that we will be watching out for in terms of the management commentary.
All right, so those were the numbers that we are watching out for in today, that they're going to report their Q1 numbers, the companies. But in the latest update on the Air India crash that has successfully completed the precautionary inspections on the locking mechanism of the fuel control switch across its Boeing aircrafts, following, of course, the deadly Ahmedabad plane crash. My colleague Sameer Dikshit is joining in with more details of that story.
So that's a significant development in the context of aviation safety, also in context with the trust with Boeing aircraft. So Tata Group owned airline Air India in its official statement has mentioned that not just Air India but also Air India Express, they have completed the precautionary inspection of the fuel control switch locking mechanism on Boeing 787 as well as on Boeing 737 aircraft. So this particular precautionary inspection has been completed, and this came in the light that after DGCA, the aviation regulator, issued the directives on 14th of July asking all the airline operators to complete the precautionary inspection of the locking mechanism, and the deadline was given of 21st of July. Air India in its statement has also mentioned, which is the most important part, that no issues have been found after the precautionary inspection has been completed, and the same has been apprised, the report has been given to the aviation regulator DGCA. Air India says that they voluntarily started the inspection from 12th of July on its Boeing aircraft fleet, and so far they have completed the precautionary inspection related to the locking mechanism of the FCS, which is the fuel control switch. The entire inspection has been completed and no such issues have been found. And this all came in the light because we have seen that after the tragic incident of the aircraft crash, the preliminary report that was submitted by AAIB, it mentioned that the fuel control switch, this particular switch, it moved from run position to cut-off position, and that became a big question mark in terms of the safety of the aircraft as well. Post which the directives were issued by DGCA to complete the inspection, and now Air India, they came forward with their official statement, and they have mentioned that the precautionary inspection has been completed and no issues have been found so far.
All right, so that's on the ongoing Air India probe. But let's move on then. Mariko Swagata Gupta has reclaimed the crown of the highest paid CEO in India's FMCG space for FY25. But in the world of finance, HDFC Bank's Shashidhar Jagdishan is leading the pack in the banking pay from consumer goods to corporate credit. India Inc.'s top leaders are cloaking in massive payouts, but who really leads when the performance meets the pay? My colleague Nivedana Prabhu breaks it down for us, the biggest boardroom paychecks of this year. Let's listen in.
They don't trade stocks, they steer them. Banking on trust, branding with impact. India's top CEOs are taking home pay packages as sharp as their suits. Forget brand wars and store aisles. The real heat this year was in the boardroom. India's top FMCG bosses are cashing in big, with compensation packages rising as fast as the brand's market share. Now, leading the pack is Swagata Gupta of Marico. He took home 39.14 crore rupees, powered by stock options worth over 20 crores. That's a hefty 65% jump over last year. Let's talk about Sudhir Sitapati of Godrej Consumer, who wasn't far behind, with 35.12 crores, buoyed by perks and performance bonuses that lifted his pay nearly 85%. Sanjeev Puri at ITC earned 25.66 crore rupees, reflecting steady leadership in a diversified giant. Suresh Narayanan of Nestle India received 23.47 crores, holding his ground year on year. Let's also quickly talk about Rohit Jawar, the new CEO at HUL, took home 23.23 crore, showing early gains in a top role. But that's what FMCG story looked like. And over in banking, the story is similar. Compensation tied tightly to performance growth and stock incentives. At the top of the pack is Shashidhar Jagdishan, MD and CEO of HDFC Bank, with a total payout of 12.08 crores, including a bonus of 4.67 crore and ESOPs worth several crores more. Let's also talk about Ashok Vaswani of Kotak Mahindra Bank, followed with 12.95 crore, aided by a joining bonus and a sizable ESOP grant, part of the bank's long-term bet on leadership. Amitabh Chaudhary, steering Axis Bank through its digital shift, earned 9.11 crore, holding steady in a year of operational focus. Vaidyanathan, the well-known founder, CEO of IDFC First Bank, made 5.55 crore as he continues to scale the bank's retail strategy. Now, whether managing money or markets, India's corporate chiefs are being rewarded big.
All right, clearly those are some hefty, lofty compensations coming in for India Inc. CEOs. But with that, it's a wrap on this edition of Market Fatafat. I will take your leave. Thank you so much for tuning in.